Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. While all of us are trying to decipher what actually went on over the weekend in Russia, another market which is grabbing the attention is Turkey. The Turkish lira hit an all time low as the country unwinds the FX support mechanism. This, of course, led to the benchmark Borsa Istanbul index rise by almost 3.7% due to favorable environment for the exporters. China, on the other hand, is fighting the continued depreciation, today setting its daily benchmark at a stronger than expected level. Good morning, JK. Interesting set of developments in the market. However, the majors remain more or less stable as of now. I'm keen to hear your take on the recent developments.
Good morning, Swaraj. Yes, speaking of Turkey, I think there is a big change that's going on. At least it has started, and from non-conventional approach of monetary policy, where they used to cut rates in the face of high inflation, they have now reverted to a normal policy, due to which they have hiked interest rate by 6.5% recently to take it to 15%. And just note that their inflation is running close to 40%. Year-on-year inflation is running at close to 40%. And they have a lot to catch up to erase the negative real interest rate that they are pulling. And apart from that, they have also stopped intervening in the foreign exchange market because their reserves are down to negative. And so it's a lot of things going on in Turkey, but if only hopes that these market friendly approach is going to be sustained for some time, because there have been instances when similar thing was started and then it was aborted in the middle. So yes, we should expect more weakness in the Turkey lira as the interest rates have a lot to catch up, and the foreign exchange is really in a crisis situation. As far as the Russian situation is concerned, yes, I think all continues to speculate, on what exactly has happened in Russia. The speculations range between one of the smartest move by President Putin, and then up to possibly his position as being weakened. We will only know what exactly happened in the coming days, but we really have to keep our views open, because anything that that has an impact on the geopolitical situation should be creating a lot of volatility in the market. So no one is sure exactly what is going to happen in the next, but at least in the near term, there was no major reaction in the market except the Russian ruble, which weakened by 0.9% against the USD. Overall, on the markets, it has been a quiet day because accepting German IFO, which once again gave a weak number from Germany, showing the economy which is continuing to struggle. Other than that, we did not have any significant data. So the data showed that German business morale worsened again in June, and Europe's largest economy really faces an uphill battle to shake up the recession. Just to be more specific, the business climate actually worsened to 88.5 from 91.5 in May. And in fact, the IFO official actually said that the likelihood of Germany shrinking again in Q2 has increased. We should remember that it is already in a technical recession. From Q4 22 and Q1 23, we have seen a negative GDP in Germany. So that actually led to a small sell-off in the euro, but again, not really much, because we have held well within the range. And on the yields also, there was a small dip, and again, it was all within a small range. So markets are really sitting on their hands from something more solid to latch on to. And therefore, we see mostly a range trading scenario. On the equities, we didn't have a sell-off in the Nasdaq led by frontline stocks, which were, the target of speculators trying to take profit. Of course, there were some negative news as well about Tesla. And I mean, it's more of a corporate specific news that was leading the market down, and nothing really specific. Asia market is actually quite steady in terms of that. And on the speaking of currency, one more currency that's really on the radar is the Chinese Yuan, which is continuing to weaken because of the policy of Chinese central bank easing, and also economy not really improving as much as expected. Investors are really waiting for some large stimulus, which is not forthcoming. So that means there is some interesting developments, particularly on the monetary policy. There is a expectation that the Latin American countries will be actually leading the rate cuts scenario or rate cut cycle much earlier than the developed markets. And in fact, some small country like Uruguay has already cut the rates, and there is an expectation that Brazil and Mexico will be leading, and in fact Chile also will be cutting their rates. So in Asia also, if we see Reserve Bank of India, then Bank of Indonesia and Philippines, all of them have been holding their rates steady, and the inflation in these countries have been moderating much more, and therefore you may expect these countries to follow, rather lead the rate cut scenario, for this cycle, and developed markets continue to struggle with the higher inflation, and possibly higher for longer is what will be more suitable for them. On the of course, yen also, we did not see any real action from the BOJ officials, although there was some verbal intervention. The minutes of the meeting actually said that the potential of inflation exceeding current expectations and rising likelihood that bank raises an inflation view. So these are factors that making people a bit cautious about going long in the USD yen for the time being. On the rupee front, there's nothing much to actually say. We are in one of the narrowest ranges once again, and nothing really seems to be encouraging players to go short or long. Just for a perspective, at 82.25 paisa, this is the narrowest monthly range that we have seen since July 21. And at 1 rupee 24 paisa, this is the narrowest quarterly range that we have seen since Q2 of 2017. So, of course, we did see following months or quarters actually leading to some bigger moves in these months and quarters. But right now we are having a very, very narrow range in the USD INR, buffeted by interest of the central bank buying, and the market really seeing good flows to be sold. No real reason for buying the USD INR, despite the fact that the premiums have actually slightly improved to around 1.85% on an annualized basis. Some interest surrounding the upcoming meeting in Sintra in Portugal, where there will be a meeting of major central bankers, and big speeches lined up, which may be in the focus because they may be bordering on the policies. Lagarde will be speaking on the monetary policy in the face of multiple supply shocks, and there will be a panel discussion tomorrow at I think 6 p.m. our time, where the central bankers of Japan, UK, Europe, and US will be sitting in a panel, and that will be a very interesting thing to follow, where there could be some hints on broad approach that these central banks are going to follow in the coming days. But apart from these, developments which are not really resulting into a market action, is something being summer months, this is what the market is actually trying to digest, and then prepare themselves for the volatility in the months ahead, hopefully. Thank you.
Thank you, JK. And very narrow trading markets we have been having with even though we had these interesting developments in Russia over the weekend, it seems to have solved just before the weekend, just before the markets opened, for it to have any speck of reaction in the markets. While just to quickly summarize, Turkey, of course, has a lot of catching up to do. High inflation and the journey towards positive real rates is going to be a long one. We had an interesting take on the Russian developments. While some are claiming Putin has executed a strategy masterclass, while others have been of the position that it has considerably weakened his position. German IFO survey showed a picture of economic struggle, while markets overall have been sitting on a broad range. Chinese yuan has continued to weaken on the backdrop of monetary easing and weak economic data. Interesting developments on the Latin American front. It's been said that the Latin American countries will be leading the rate cut cycle. Even in Asia, we observe the emerging countries seem to have the lower inflation, while higher for longer scenarios being playing out in the developed nations. While rupee, again, following the broad markets, remain in a very, very narrow range. That's it from us today. Thank you so much for listening. Tune in tomorrow for another round of fresh updates. Thank you.